The mainstream media is screaming sell, warning that Trump's policies will trigger a recession. Headlines are chaotic. Social media is panicking. But before you dump your portfolio, let's break down what's really happening. I'm Amit's billionaire brain, a seasoned investor who's navigated multiple market crashes. And right now, there are 3 critical triggers behind this volatility, all tied to Donald Trump. This isn't about politics. This is about protecting your wealth and potentially profiting from the chaos. Let's dive in. Trigger 1. Trump's trade war history. Repeating in 1930, the US imposed the Smoot-Hawley tariff, sparking a global trade war that worsened the Great Depression. Now Trump's 2025 tariffs on Canada, 10% on energy, 25% on goods, and China are mirroring that playbook. Here's why this matters for your wallet. Higher prices. Businesses pass tariff costs to consumers. Think cars, electronics, food. Retaliation. Canada hit back with surcharges. China's BRICS alliance is bypassing the US now. Market uncertainty. Volatility. But here's the twist. Trump might want this chaos. Why? Let's connect the dots. Trigger 2. NATO tensions. The global domino effect. Trump's threats to withdraw NATO funding are rattling global stability. If the US steps back, it creates a power vacuum, and markets hate uncertainty. Potential fallout. Defense stocks surge. Lockheed Martin, Northrop Grumman. Energy spikes if Russia exploits instability. Long-term risk. Weaker alliances, a slower global trade. Trigger 3. The secret plan. Crash to win. What if this crash is intentional? Trump's publicly trashed the Fed's high rates. But here's the conspiracy with evidence. A market crash forces the Fed to cut rates. Lower rates draw cheaper US debt payments, saving billions on 36T debt. Stimulus pumps markets back up just in time for the election. Sound crazy? Maybe. But in 2019, Trump pressured the Fed to cut rates during a dip, and markets soared. History could repeat. How to profit, step-by-step strategy. Crashes aren't disasters, they're opportunities. Here's how to prepare. 1. Buy the dip, but safely. Focus on blue-chip stocks. Apple, Microsoft, trading at discounts. Use dollar-cost averaging. Never time the bottom. 2. Diversify for safety. Gold, silver hedge against inflation. Dividend stocks. Johnson & Johnson, Procter & Gamble. Pay you during downturns. 3. Watch for catalysts. Fed rate cuts. And tech growth stocks rally. Trade war de-escalation. Industrial stocks rebound. Want my 2025 portfolio picks? Subscribe, hit the bell. The media wants you fearful. Smart investors stay greedy when others are fearful. Drop a comment below. Are you buying the dip or waiting? And if you want my full 2025 investing guide, tap the video here. But subscribe first. This storm will pass. Will you be ready?